Hey guys, how's it going? My name's Andy from Magoo Investing, and today we're going to be kicking off a new series talking about the different type of investments out there, and we're going to be talking about long-term investments, and more specifically, we're going to be talking about long-term investments in stocks. So when we're talking about this, we kind of have two categories that we can break this down into. We just have the normal stocks that you're looking for, the classic buy low, sell high type of bullshit they talk about. And then the other type, you have the dividend paying stocks, and we'll get into that a little bit. But I recently just made a video, actually I think it was the last video I made, on how to pick your first stock. So I'm going to link that down below because I think it's really applicable in this sense, and I'm going to kind of mention a little bit. TLDR, basically you're looking for a stock that you really believe in the company, something that you use very often. And then second, you're going to want to do a little bit of research, put in price target, that stock name, and then make sure that some of the experts think that it's going to be going up, because you don't want to be a stock that's going down, you want the one that's going up, upward spiral, am I right? So now that you have that, we're going to talk about the pros and cons of these long-term investments. All right, so let's start it off with the pros. So with long-term investments in stocks, kind of the easiest pro to think about is it's really the least amount of time commitment. You don't have to do that much research. It's something that you're going to buy today, sell 2 years, 5 years, 20 years from now. Kind of when you're thinking about these types of stocks, think about it's Christmas Eve right now. So pretend you're at like a Christmas party with your family. You're talking to your uncle that's bragging about, oh yeah, I bought Apple when it was $80 like 5-10 years ago. Just something where you buy it a long time ago, you kind of forget about it, and then you sell it in the future for a profit. The next pro that we're going to talk about is the least amount of risk associated with it. Basically, over the entire history of the stock exchange, the market's averaged about 7% a year, pretty much every year. This was a down year. Obviously, if you've read anything in the news, I'll throw some more news things up right now. Market's getting kind of hammered, but over the history of the stock market, it's averaged about 7%. So if you're holding something for long enough, most likely if you're picking a well-established company, you're going to be making some money eventually. It's only if you're getting these companies that are kind of going out of business. A lot of the car companies are kind of struggling right now, but if you're picking something that's doing decently well, years from now, it's most likely going to be going up. And then the final pro that we're going to be talking about for this is it's pretty much the best time right now to get into this. If you've been reading anything in about the market recently, everything's getting hammered. So when I started investing in July, if someone told me that by New Year's Apple would be $145, I would have been like, "There's no way," but it is. So in July it was $220, and now it's $145. So pretty much everything's on sale right now. Think about like a Black Friday type of thing. Everything's cheap, and if you're having a long-term investment, you can get in pretty much any time because you're gonna be holding it for a while. If you're doing more of the short-term stuff, which we'll talk about in another video, probably not a great time for you. Just kidding. Now we're going to talk about the final pro. So I'm going to throw up on the screen right now the tax brackets when it comes to capital gains. Basically, there's two types of capital gains. You got the long-term and the short-term stuff. So based off of this bracket, if you're holding a stock for over a year, so say I bought it on January 1st of this year and then sold it on January 2nd of next year, if I was in kind of the most common tax bracket for someone my age, someone in the 20 to 25-year-old range, you'd be paying zero tax on that. Compared to, I'll also throw that up right now, if you sold before that time, you would just kind of be included in your income tax. So that goes into your different tax bracket, more complicated, but basically the overall theme is if you hold something for longer than a year, you're saving a lot of money on tax. All right, so now we're going to go in and talk about the cons, the sad stuff. So the first con that I'm going to talk about is that there's no cash flow involved. Basically, your capital is being held up in the stock, and while it could be like adding on in value, and you can see this hypothetical value that you have that your account's gone up, until you sell that position, I'm going to say it a million times, until you sell, you do not have a loss or a gain at this point. There's no difference because you have not done anything with your account at this point. So if you're, say you bought something for $100 and now it's $150, you're like, oh nice, I made 50%. No, you haven't made 50%. You make 50% when you sell it. So if you sold it right now, you'd be making that money. But if you're going to keep holding it, you're not getting that cash back. It's just sitting and stuck in that stock. All right, so we talked about some of the basics of the long-term stocks. And now we're going to kind of go over the dividend-paying stocks. This was something that I really didn't know much about until I started learning about investing. But I learned a lot from my dad, who is retired at this point. So this is something he is really looking at now. So basically, the idea behind a dividend-paying stock, it's normal companies like, say, AT&T, Procter & Gamble, companies that you've really heard of that have been around for a long time. And basically the way that a dividend works is after every quarter, so 4 times a year, the company pays out a dividend to the shareholders as kind of like a thank you for holding the company. So instead of using that money to increase the share price and increase the earnings type of thing, they're paying it back to the shareholders. So this means compared to holding a long-term stock that doesn't pay a dividend, you're going to be getting that cash flow. So whether that's a check in the mail, sometimes it just gets deposited right into your account, you're seeing additional money every time instead of having to sell your position. All right, so now for the pros. As I mentioned about this cash flow thing, that's one of the biggest pros. For someone like my family that's both my parents are close to being retired, having a constant cash flow is really attractive to them. It's something where they're guaranteed to have a steady flow of income coming in every month or every couple of months, depending on when the dividend's paid out. So that's super attractive. They're looking to people that buy a dividend stocks. They're not really looking for the increase in price, as I mentioned. They're paying the dividend that would be going to increase the stock price. So that's kind of like where the trade-off is. So they're going to be holding on to this forever. Stocks like AT&T have steadily gone down over the years, but it's still paying out. They're pretty much increasing their dividend very often. All right, now we'll talk about a con. So we have the whole cash flow thing being a pro. It's also a con. So I'm going to give an example recently that's been in the news. GE, General Electric, recently has cut their dividend down to 1 cent per share. So someone in 2016, around this time pretty much, the stock was selling for over $30 and was giving, I think, 25 cents every quarter, so $1. So that's a 3% dividend per year, which is pretty all right. And now at this point, the stock price is sitting around $6, and they're giving out 4 cents per year. So say you bought that 2 years ago, now you're stuck with a stock that's worth, what is that, a fifth of what it used to be, and now it's paying out 1/20th of what it used to. So if you get into kind of a really bad company like this that's just on the down and down, you're screwed out of the stock price and you're no longer getting that dividend. So you kind of have to watch out for that. It's really rare that happens, but it's really possible that it could. You just got to be careful, and why I'm going to plug that video down below, picking your good first stock, because you do not want to pick a company like this that's on the down and down and get kind of trapped into it. All right, so let's wrap up this video. So overall, long-term investments are the safest way to go. You're not going to be making the most money, but it's something that you can put in a couple hours, maybe do a little bit of research, put in that initial capital, and then kind of decide what you want to do from there. Do you want to hold it for a year? Do you want to hold it for 5 years? It's really up to you. Depends how the market's doing. It's really easy for someone that really has no experience in the market to just kind of pick a company that they really enjoy, put some money into it, and then 5 years down the road, take that money out and then do it all over again with maybe a little bit more knowledge. So it's a good place to start in the market. It's something that I would really recommend. A lot of my friends that aren't into the day trading, short-term swing trading like I am, this is something that they all do. It's the classic, when you think of investing, it's kind of what you think of. It's a great place to start. So, all right, so I hope you liked this video. I'm going to be making more videos in this series. We went from long-term investments here. The next video will be swing trading. We'll talk about that. It's what I enjoy the most, and we'll talk about that in a couple days. So if you like this video, please hit the subscribe button so you don't miss any future uploads. And the world of investing is a pretty scary place, and hopefully I can make it a safe and beneficial experience for everyone. Thanks.